Good afternoon, everybody. Welcome to the CAISO WECC 2016 Spring Outlook. We're going to take a few minutes to give everybody else an opportunity to sign on, and we'll get going here in a few minutes. Thank you very much.
Hi everyone, thank you for joining us for the CAISO and WECC 2016 Spring Outlook. We're going to get started right now. Just to begin, if you have any questions throughout the webinar, please type into the question box on your screen and submit, and then we'll be able to address your questions at the end. My name is Devin Bracker, and I'm a meteorologist with Genscape. And I'm joined here with David Quinn, who's a CAISO analyst, and so we'll be giving the presentation today. So to begin, I'm going to talk about demand. I'd like to start by just recapping the winter that we just completed. The temperature and precipitation across the West this winter verified in stark contrast to last year, which was a very warm and dry winter for both California and the Pacific Northwest. In California, temperatures were mostly seasonal for December and January, but pushed into strong warm anomalies in February. These temperatures did fall closely in line with our initial winter forecast. Strong precipitation anomalies have verified for Northern California, while the Southwest has remained fairly dry, which reflects a slight northward shift. Reflects a slight northward shift in our expected El Nino-driven storm track. But in general, our expectations of heavy winter precipitation in California have verified. In the Pacific Northwest, warm anomalies were present in December and strengthened through the season, lining up well with our winter seasonal forecast of slight warm anomalies in the Northwest. Precipitation, on the other hand, is verified much above normal, especially near the coast, which contrasted with our winter forecast for a dry Pacific Northwest, which is usually the signal you'd expect in an El Nino-driven pattern. In terms of demand, the peak demand this year was very similar to last year for winter, with less than a 1% year-over-year change in both BPA and CAISO. This is a reflection of fairly mild winters overall. In California, peak load typically occurs in mid-December. This year we peaked nearly a gig below the 5-year average, but within 100 megawatts of last year's peak, actually less than 100 megawatts. And coincidentally, the peak actually fell on the same day, December 15th. This peak load was driven by heating load, with temperatures in the 30s and 40s across California on December 15th, and clear skies limiting lighting load. Genscape's forecast peak for that day was 31,747 megawatts, so we were within 70 megawatts of the actual demand that day. For BPA, the peak for winter was also weaker than normal in the Northwest. fitting with the general picture of a warm Pacific Northwest. Peak load has been observed at varying points in winter, ranging from mid-December to February through the past 5 years. But this year we peaked in early January, and interestingly, the peak fell on a Sunday over a holiday weekend, which is a day you'd typically expect quite weak demand. And as is often the case with weekend peaks, very strong cold anomalies were observed, with temperatures in the teens across much of the Northwest, and some cloud cover contributing lighting load in BPA as well. So moving toward our outlook for spring, I just want to give a bit of context in terms of our recent spring observations. For the past 3 years, the spring seasons have been warmer than normal across the West. This warm trend has been largely driven by the Pacific Warm Blob, which is a persistent pool of warm ocean waters in the northeastern Pacific Ocean. Last year was drier than normal throughout BPA and CAISO, although the Northwest has seen some wet anomalies for BPA in recent years. So spring tends to feature weak demand overall across the West, as temperatures are usually mild, driving minimal heating or cooling load overall. So for California, demand tends to strengthen through the season, with the spring peak typically occurring in mid-May as cooling load starts to pick up. So peak demand is driven by late season cooling load as average temperatures warm from the 50s in the early parts of spring into the 70s through the end of spring. Demand typically peaks near 38 gigawatts on average, but can range from the low 30 gigawatt range during a cooler than normal spring up into the low 40 gigawatt range in a warmer than normal spring. For BPA, peak demand is typically driven by early season heating load, in contrast with California. So this is often compounded with cloud-driven lighting load. And as a result, demand tends to peak in early or mid-March, as opposed to late in the spring as in California. And the average spring peak is near 8.4 gigawatts in BPA. So after the March peak, we typically see demand weaken through the season as our average temps in the 30s, early season warm to the upper 50s in May. So now we'll move forward into the Genscape Spring 2016 forecast. Our key driver continues to be El Nino. The persistence of El Nino has been not quite unprecedented, but almost. So we're still in the very strong status as of the end of February for El Nino. We expect it to weaken through the spring, but remain in the strong category through May. So El Nino typically drives warmer spring temperatures, especially in the Northwest, and enhanced precipitation through the Southwest and as far north as Oregon. Some climatologists have suggested that the sheer strength of this El Nino is what's been keeping the rain sort of at bay for California so far. So as we see El Nino weaken, we may see back to more typical levels. We may actually see more of that standard El Nino signal in terms of temperatures and precipitation for California. The other key forecast driver for the West is the weakening and, in fact, near disappearance of the Pacific Warm Blob. So the El Nino has actually helped disperse this concentrated warm water off the coast, and this will help more seasonal temperatures and even some cool anomalies to dominate for much of the West this spring, which is a bit of a shift from warm anomalies of recent years. So just to take a quick look at the monthly breakdown for our forecast, we expect temperatures to be normal with some cool anomalies in the Southwest early in the season, becoming mostly normal everywhere by mid-season, and some warmth picking up in the Northwest late in the season. And in terms of precipitation, we're expecting above normal precipitation for California and the Southwest, especially early in the season, becoming mostly normal for the remainder of the season, with the greatest wet risks in the Southwest through the spring. So now we're going to shift into the supply, and I will be starting off to give a bit of a rundown for the California drought and hydro in general. So as of the end of February, the drought classification remains in effect for much of the western United States. Strong precipitation anomalies have allowed some pretty substantial improvements across the Northwest since the start of the water year, which is October 1st, and some minor improvements for Northern California and the interior. But despite a fairly wet start to 2016, much of California remains in an exceptional drought, generally a result of just the extreme severity of the drought overall. It's going to take quite a bit to overcome. This spring, we do expect to see some improvements in the drought across much of California, but persistence in strength of drought in parts of Northern California, as well as in the interior Pacific Northwest and the far south of California. This drought outlook from NOAA actually lines up quite well with our precipitation outlook for the spring, with expectations of anomalous precipitation across the Southwest, offering some encouragement for drought improvements across the state. But we do expect, in general, for just the status of drought to persist in California. So I did want to take a look at the winter snow totals for the Sierra Nevada range that we've seen so far this year. Since the beginning of January, we have had sort of a roller coaster ride in terms of snowpack and water supply in California. So these images are the snow water equivalent in the Sierra Nevada range beginning January 1st, and this is every 2 weeks since then. So we saw some substantial snowpack had built in the Sierras leading up to January 1st, and despite a bit of variability in aerial coverage, we did see continued build out of the snowpack through the month of January. However, strong warm anomalies started to take hold through the month of February, and so we saw quite a bit of snow melt, especially at the low elevations in February. On the other hand, we do notice that despite the drastic low elevation snowmelt, the snowpack at high elevations has still persisted for the most part through this warm period. And so looking from January 1st through the end of February, we've still seen average and maximum snow water equivalent increase overall. In addition, if we take a look at the year-over-year comparison, we see a bit of a more heartening story in terms of water supply for California. So these images are taken the last day of February last year and this year. And the end of February snow totals show significant improvement versus last year. We see 4 times the average snow water equivalent, 160% of the maximum snow water equivalent, and 3 times the average snow depth year over year. Furthermore, the outlook for the next 2 weeks, if it's indicative of March overall, suggests that we can expect a substantial boost to California precipitation, adding some confidence to our bullish March precipitation forecast in general. So we'll take a look now at how this will impact hydro generation in general. So okay. While the January-February timeframe so far has been weaker than the January-February of last year, BPA hydro generation has trended toward normal so far this year after nearly a year at below normal generation levels. So last year, very warm temperatures and much below normal precipitation led to an early annual hydro generation peak, peaking in February versus the typical May to June timeframe of a hydro peak. This year, moderate winter precipitation has contributed to generation trending toward normal, and based on our precipitation and temperature outlooks for spring, we're expecting the general pattern to be much more similar to normal, with a May-June peak in generation. However, most of the precipitation we've seen so far in the Northwest has been generally coastal, with weaker anomalies in the interior and at the high elevations. So based on that trend, we're expecting generation to remain somewhat below normal, although still matching up with a more typical seasonal pattern through the spring. And we'll take a similar look at the CAISO hydro generation. So far this year, we've seen a comforting boost in hydro, pushing above the 2011 to 2015 norm for California. And this is largely driven by the snowmelt observed through the month of February. Moving forward into spring, we expect generation to remain above normal in the coming months. With a wet outlook for March and some weak wet anomalies through April and May, we expect a much healthier water outlook for California, trending toward normal generation moving into the summer. This graphic includes a range for our hydro outlook, and the scenario leading to the high case includes substantial Sierra Nevada snowfall through March, blended with some low and middle elevation rainfall and seasonal to cool temperatures. So this case would allow continued build out of the snowpack and maintain above normal hydro generation through the spring and staying near or slightly above normal through the summer. On the other hand, the low case scenario could play out if we see predominantly rainfall through the month of March, with warm temperatures preventing substantial snowpack build. And in this case, periodic uptakes in generation would sort of just stand out against a weak generation pattern overall through the summer. And that scenario could result in an end of 2016 looking more similar to the end of 2015 as opposed to a more normal end of the year. And I just want to point out that our middle case, our official Genscape forecast, does fall closer to the high case scenario. So we feel pretty confident that we'll see some moderate snow build through March. And so I'm going to take a quick look at another important renewable, our wind generation. Based on average daily generation for the 2011 to 2015 period, we see that a typical spring day usually brings 38,000 megawatt hours of wind generation for California. And the typical diurnal pattern, which is plotted on the left here, indicates that we usually see strength in the early morning and in the evening hours, and more of a valley in wind generation in the middle of the day. So based on analog years, we expect seasonal or slightly stronger than normal wind generation this spring for California. And so just as a frame of reference, a 10% increase in hourly generation will correspond to a daily generation of nearly 42,000 megawatt hours. And a similar look at BPA wind. In the Northwest, a typical spring wind pattern brings weakness in the morning and strength in the evening, averaging out daily generation for spring totals nearly 33,000 megawatt hours. And based on analog years, we expect somewhat bearish wind generation for the Pacific Northwest this spring. And so for a frame of reference, a 10% deficit in hourly generation would result in a daily generation of 29,000 megawatt hours. And with that, I'm going to pass it over to David to continue talking about supply.
Thank you very much, Devin. As we continue talking about supply, we're going to take a quick look back at February solar generation. A couple things of note here. We've set multiple all-time hourly solar generation records in February. Also, February saw the greatest month-over-month change ever. A couple factors that went into that. January was abnormally low solar generation-wise. It was the first time in 4 years that there was less solar generation on average in January than there was in December. So that contributed to the month-over-month change being large. Obviously, the other factor is the continued extremely fast growth of solar generation. As we move forward into our outlook for solar generation for the spring months, here we have our outlooks for the next 3 months. How we went about forecasting this for March and April is we took similar year-over-year growth as we had seen in the past. That puts us, an average day in March, we expect to peak around 6,600 megawatts. In April, that puts us around a little bit over 7 gigs. Typically, we see the largest month-over-month growth in solar generation from February to March, and that's what we expect to see once again. With forecasting May solar generation, we currently see that peaking a little bit under 7.2 gigs for average daily solar generation. That was a little bit more difficult to forecast overall because the year-over-year change from 2014 to 2015 was much lower than normal due to the abnormally wet May in 2015. Overall, we expect a growth to go back to normal levels and similar to year-over-year growth that we see in March and April. And once again, that puts that average daily peak a little bit under 7.2 gigs. So, with the growth in solar and revert to normal levels of hydro, what does this mean for thermal generation? We think overall it means much less thermal will be necessary. If you take a look at this slide, the top two graphs show where we expect solar generation on the left to be. As you can see, it'll be an all-time high as we can see continued growth, and California hourly hydro generation we expect to be at its highest levels since 2011. Add up all those new renewables and we get the total amount of non-gas gigawatt hours necessary each day, and we have the value at the bottom left chart here. The bottom right chart depicts the decreased level of thermal generation necessary to supply load, and overall we think that there's going to be a big drop year over year from 2015. All this is summarized in this last chart we have here. Additionally, we have load imposed on this graph. Couple notes there. Real-time load has been trending downward. One factor in that is the growth of behind-the-meter solar generation, which contributes to the decrease in real-time load. Overall, we expect 35.6 billion cubic feet of gas generation to be displaced by the increase in renewables. That is a much greater drop than we would expect, given simply the drop in load, as the renewables displace even more gas generation. Now that we've covered supply, we're going to move on to the pricing and congestion section of the presentation. First, we take a look back at winter heat rates. A couple things of note here. You'll notice that the troughs in SP are much lower than they are in MP. That can be attributed to the Path 15 congestion we saw in December and January, and to a slightly lesser extent to the Moss Landing Kenosha congestion that we saw at the end of January and into February. Also, overall, these heat rates are both low in NP and SP, especially in February due to the record solar generation and much higher hydro than we have seen in previous years. The other factor contributing to low heat rates in NP and SP were the warmer than normal temps in February, which contributed to earlier runoff and excess hydro generation. Next, we take a look at the upcoming outages for the springtime. On the right, you'll see the total amount of megawatts removed from the stack by fuel type. As you see, if we move through the spring in California, there'll be a greater number of outages in March and decreasing into May. The one exception there is the big Diablo outage that is expected to go into place on May 1st. One note there is that's going to prevent the extremely low prices that we might otherwise see in the middle of the day with solar generation where we expect it to be. In the Northwest, we see relatively stable levels of outages across the springtime. Next, taking a look at congestion, just a quick look back at historical spring congestion in the day-ahead market. This graph depicts total dam congestion as the sum of the absolute value of shadow prices from any constraint. A couple things to note here. As you see in 2014, we saw very strong congestion, highest in the past 5 years. And in 2015, we saw very much lower congestion. And we're going to get into why here in the next few slides. Here we have the top 20 spring constraints over the past 5 years. As you'll see, the red constraints are specifically hydro-driven constraints. We have seen some similar congestion to these along the Rio-Brunswick line and the Brunswick-Drum line in the past few weeks, and with our expectations for hydro, we expect similar congestion to continue. The bold constraints here are constraints that have showed up for 4 of the past 5 years. They're all intertie constraints, which makes sense. And as you'll notice, by far the 2 most common constraints in the springtime is congestion along the PACI, which is now referred to as Malin 500, or knob intertie. Because of that, we chose to look specifically at congestion along those 2 lines. As you'll see, similar to overall congestion, the congestion along those 2 lines was at its highest the past 5 years in 2014. That can be explained by the high levels of northwest hydro and a relatively large D-rate across the spring, specifically on Malin 500. 2015 saw very little congestion on these 2 lines, and that can mostly be attributed to low levels of northwest hydro generation, which we're going to get into now. So this graph depicts percent of normal water supply at the dells. As you can see, 2015 was very low, 69% of normal levels of water supply, which again is why we saw such low levels of congestion along Malin 500 and Knob. With water supply levels expected to return to their normal levels, we should see stronger or more congestion on Malin 500 and Knob than we did last year, and we expect it to be somewhere close to 2013 levels, which is where we expect the water supply levels to be similar to it in the Northwest, and specifically at the dells. There is some upside to this forecast here if we were to see a wetter and warmer March. If that was the case, we would see stronger congestion along Malin 500 and Knob. And additionally, if that were to happen, we could see hydro peak a little slightly earlier than normal and result in less hydro generation in June and July. So our main takeaways from our presentation, mostly on the supply side here. Solar growth continues unabatedly for the foreseeable future. We see the return of normal levels of California hydro for the first time in 4 years. Also, Northwest hydro is expected to increase back to around normal levels after last year's anomalous runoff season. And tie all that together, this is the first time we'll have this level of solar generation at the same time where we have significant hydro. This is going to push lots of the thermal generation out of the stack, which is our main point for this presentation. That's the end of our webinar. I'd just like to point out that April 21st and 22nd in Chicago is Genscape's Energy Forums, and we encourage everybody to register now. The link is right here on the page. Also, if you have any questions, feel free to shoot them off, and we'll get back to you as soon as possible. Thank you very much.
All right, so we have a question with regards to solar build. Specifically, if there are any units that we know are coming online in the next 3 to 6 months.
Yes, so in the next 6 months, we expect 3 units and specifically to increase output, 3 solar units to increase output. McCoy Solar, is expected to increase. Right now, it's only at 168 megawatts of the 250 are online, and we expect that to increase close to full capacity. Similarly, with Desert State Line, right now only 148 of 300 possible megawatts are online. And Silver State South is the last one we expect to increase in the next 6 months, which currently only has 127 megawatts of the 250 online, and we expect that to get near full capacity as well. Thank you very much, guys. That's all the time we have for questions right now. If you have any more questions, please email Devin or myself. Our emails are in the slides that you will be receiving, and we'll get back to your questions as soon as possible. Thank you very much.